Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamilton, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're exploring whether a significant rate cut from the Bank of Canada is on the horizon this December. As the central bank's final interest rate decision for 2024 approaches, many in the financial sector are anticipating a fifth rate cut of the year. The big question remains, will it be a modest 25 basis points or a larger 50 basis points reduction? According to economists at Toronto Dominion Bank, a 0.25% rate cut is expected next week on December 11th, though they acknowledge a more substantial cut is possible. Meanwhile, Bank of Montreal's Shelley Kaushik also suggests a 25 basis point reduction is likely. However, the Royal Bank of Canada has indicated that the sluggishness in the Canadian economy, particularly after the latest national gross domestic product figures, could justify a 50-point cut to close out the year. This decision is being closely monitored by prospective homebuyers and mortgage professionals alike. They are keen to see how much further rates might drop. Tracy Valco, founder of Valco Financial, shared insights with Canadian Mortgage Professional, emphasizing that even a substantial 50 basis points cut may not drastically alter the market's outlook. She pointed out that despite consumers' hopes for a significant discount, the gap between the lowest fixed and variable rates remains, making fixed rates a more attractive option as they are not directly impacted by the central bank's rate policy. Tracy Valco advises clients to be cautious, noting that a reduction in bank prime rates does not necessarily affect pre-approvals. Most lenders, including those in the broker space, are approving clients based on fixed rates, which are stress-tested and generally lower than the current bank prime. Even though a variable rate might be more appealing in a declining rate environment, it's often not the best choice at the time of pre-approval due to these stress tests. Nonetheless, a rate cut by the Bank of Canada would still be positive news for the market. Valco anticipates a 25 basis point reduction, but wouldn't be surprised by a larger move, with trends indicating further decreases into 2025. This could eventually lead to more favorable conditions for homebuyers. The Bank of Canada has maintained a cautious stance on further significant rate reductions. Governor Tiff Macklem suggested that Canadians could breathe a sigh of relief regarding the economy, hinting that the 50-point cut in October might not be repeated. However, the continuing economic slowdown, with growth dipping to a 1% annualized rate in the third quarter, has reignited discussions about the potential for a larger rate cut. While the central bank hasn't commented on the likelihood of an oversized reduction next week, it has been open about the possibility of further cuts in 2025. This cautious outlook might be causing some homebuyers to remain on the sidelines, waiting for rates to fall further. As Valco noted, many Canadians are on the fringes of the market due to current rates. She explained that while a variable rate might be recommended, many clients ultimately don't qualify, leading them to wait for additional decreases. The hope is that rates will continue to decline into early 2025, providing a more accessible market for those looking to purchase a home. Today we're diving into a report from the Canada Mortgage and Housing Corporation, which has raised concerns about potential increases in mortgage costs for a significant number of Canadian homeowners next year. According to the CMHC, nearly 1.2 million homeowners could face higher mortgage payments in 2025. This is particularly notable for those who secured their mortgages when the Bank of Canada's overnight rate was below 1%. The CMHC's analysis highlights that approximately 85% of these homeowners are at risk due to their fixed-rate mortgages coming up for renewal. These mortgages were originally signed during a period of historically low interest rates. And with the current economic conditions, there is a likelihood that the renewed rates will be higher. This situation presents a financial challenge for many Canadian households, as they may need to adjust their budgets to accommodate higher monthly payments. The potential increase in mortgage costs is a direct result of the interest rate environment, which has shifted since these loans were initially taken out. Economists have pointed out that this wave of renewals could impact the broader housing market as well. If a significant portion of homeowners face difficulties affording their new payments, we might see changes in consumer behavior, such as a slowdown in housing market activity or an increase in the number of homes listed for sale. The CMHC's report underscores the importance of homeowners preparing for these potential changes. Financial advisors recommend reviewing current mortgage terms and exploring options with lenders well in advance of renewal dates. This proactive approach can help mitigate the impact of higher interest rates. While this report may sound alarming, it's important to note that the Canadian housing market has shown resilience in the past. Market conditions can vary, and it's possible that economic factors could shift again before 2025, potentially easing some of the projected pressures on homeowners. In recent news, Toronto-Dominion Bank has reported gains in its mortgage lending business despite a challenging quarter. The bank has seen year-over-year market share increases in real estate secured lending, a positive sign amid ongoing anti-money laundering remediation efforts. While specific lender market share data isn't publicly available, Raymond Chun, who is currently the Chief Operating Officer and will soon be taking over as President and Chief Executive Officer, shared that TD's personal mortgage volumes were up by 4% in the fourth quarter compared to the previous year. Sona Mehta, the group head of Canadian Personal Banking, attributed this growth to TD's strong distribution network and the scaling of capabilities like TD Mortgage Direct. This platform, launched about a year ago, has significantly improved conversion rates, reportedly 3 times higher than traditional lead programs. The channel was designed to streamline the mortgage application process through online tools and direct access to mortgage specialists, which outgoing President and CEO Bharat Masrani emphasized as modernizing the process and resonating well with customers. Mehta also highlighted TD's multi-channel presence, which includes proprietary channels and broker relationships. The bank has moved into the next phase of its specialization advice strategy by placing specialized bankers in branches specifically for real estate, secured lending, and investing. This approach integrates these bankers into an ecosystem with the mobile mortgage sales force, which has already shown strong results. Mehta noted that this ecosystem fosters franchise relationships and enhances retention and profitability profiles. Additionally, TD reported a decrease in the average remaining amortization periods across its mortgage portfolio. This trend has been observed in other major banks, like the Royal Bank of Canada as well. The bank offers fixed payment variable rate mortgages, keeping monthly payments stable despite interest rate changes. As of the latest quarter, only 8.7% of TD's mortgage portfolio had an amortization period of 35 years or more, a significant drop from the 27.4% peak in the first quarter of 2023. The bank's earnings report also showed an adjusted net income of $8.8 billion for 2024, which represents a 17% decrease year over year. However, the third quarter net income showed an 8% increase year over year, reaching $3.2 billion. The residential mortgage portfolio saw a slight increase, reaching $270.9 billion in the fourth quarter of 2024. Meanwhile, the home equity line of credit portfolio also grew, reaching $123 billion. It's important to note that TD's percentage of uninsured mortgages remained consistent at 83%, with an average loan-to-value ratio of the uninsured book increasing slightly to 52%. The bank's portfolio mix showed that 34% of its mortgages were on variable rates, and 59% of mortgages are set to renew in the next 12 months. The Canadian banking gross impaired loans rose slightly to 0.18%, while the net interest margin was stable at around 2.8%. TD has also been dealing with a comprehensive review of its strategies following U.S. sanctions related to money laundering activities. The bank has suspended its medium-term financial targets as it addresses these issues. Incoming President and CEO Raymond Chun mentioned that TD is examining its business mix, profitability, and risk-adjusted return on capital to identify areas for improvement. The bank plans to complete most of its anti-money laundering remediation actions by the end of 2025. Collingwood, Ontario, a picturesque town nestled along the shores of Georgian Bay, has become an increasingly popular destination for both year-round residents and seasonal visitors. Known for its vibrant community, proximity to Blue Mountain Ski Resort, and stunning natural beauty, Collingwood offers a blend of small-town charm and modern amenities. As the town grows in popularity, its real estate market has also seen significant activity, with rising prices and strong buyer demand. The average sold price for homes in Collingwood as of November 2024 is approximately $810,142. This figure represents a 10.6% increase compared to the same period last year, indicating robust demand for properties in the area. This demand is driven by both local and out-of-town buyers seeking a mix of recreational opportunities and a high quality of life. Single-family homes in Collingwood command an average price of $1,082,578, marking a 10% rise from 2021. These properties are highly sought after for their spacious layouts, private outdoor spaces, and proximity to amenities such as schools, parks, and shopping centers. Meanwhile, the average sale price of condominiums is $661,307, a 13% increase year over year. Condos offer a more affordable entry point into the Collingwood real estate market and are particularly attractive to retirees and young professionals looking for low-maintenance living. Townhouses in Collingwood have seen the most significant price growth, with the average sale price reaching $823,454, up 19% from the previous year. These homes often strike a balance between affordability and space, making them a popular choice for families and first-time buyers. In the last 28 days, there have been 398 new listings in Collingwood, with homes spending a median of 34 days on the market. The selling-to-listing price ratio is at 97%, indicating that most homes are selling close to their asking prices, reflecting a healthy and competitive market. The increase in new listings suggests that inventory levels are improving, providing more options for buyers. The Collingwood housing market has seen a consistent appreciation in home values, with average prices increasing by 6% year over year. This upward trajectory reflects the town's growing desirability as a residential and vacation destination. Collingwood's unique blend of outdoor recreation, cultural events, and dining options has made it a magnet for buyers looking for a vibrant lifestyle. The shift toward remote work has allowed more professionals to relocate to areas like Collingwood, where they can enjoy a higher quality of life without sacrificing career opportunities. This trend has significantly increased demand for homes in the area. Recent investments in infrastructure, including schools, healthcare facilities, and transportation, have enhanced Collingwood's appeal. These developments ensure that residents have access to essential services while enjoying a small-town atmosphere. As more people move to Collingwood, the demand for housing has outpaced supply, contributing to rising prices. The town's strategic location within a few hours of Toronto makes it an attractive option for those looking to escape the hustle of the city. While the current market trends favor sellers, buyers still have opportunities to find their dream homes in Collingwood with careful planning and strategy. The increasing inventory may help balance the market over time, potentially moderating price growth. However, the long-term outlook remains positive, as Collingwood continues to attract new residents and investors. For those considering buying or selling a home in Collingwood, staying informed about market conditions is crucial. Partnering with a knowledgeable real estate agent can provide valuable insights and guidance, ensuring a successful transaction. Collingwood's real estate market exemplifies the growing demand for lifestyle-oriented communities. With its strong price growth, diverse property options, and vibrant community, the town remains a desirable destination for both buyers and sellers. The latest report from the United Way Peterborough and District, titled "Housing is Fundamental," paints a concerning picture of the housing market in Peterborough. Authored by Paul Armstrong, this annual report highlights the ongoing challenges related to housing affordability and accessibility in the region. One of the key findings of this year's report is that Canada has hit a new low in its vacancy rate, standing at just 1.5%. In Peterborough, the situation is even more dire, with a vacancy rate of only 1%. This tight market has led to significant increases in rental prices, with the average market rent climbing to $1,325 across all unit types, marking a 6.5% increase from the previous year. Particularly impacted are three-bedroom units, which have seen the largest spike in average market rents at 7.7%. The report indicates that the annual income required to afford the average market rent is now $53,000, posing a significant challenge for many residents. The report also sheds light on broader trends in the Canadian rental market, noting that the national vacancy rate of 1.5% is a result of strong rental demand outpacing supply. This has led to tighter markets and lower affordability, with rent growth significantly exceeding average wage growth. Paul Armstrong, the report's author, expressed concerns over these trends, stating that when rent increases outstrip income growth, it signals a systemic issue. He highlighted the stark reality many face, where paying rent leaves them reliant on food banks for sustenance. Armstrong emphasized that the inadequate supply of rental units, resulting in a 1% vacancy rate in Peterborough, necessitates urgent action. The report also points out that housing costs have become a major driver of inflation, and with 20% of Canada's rental stock owned by large capital enterprises, Armstrong suggests there is an element of inequity at play. The growing homelessness issue, coupled with a lack of new social housing developments, underscores the deepening housing crisis, with little sign of relief. Jim Russell, CEO of United Way Peterborough and District, added that stable and affordable housing is crucial for a healthy community. He noted that food banks are experiencing unprecedented numbers of first-time users, highlighting the cascading effects of housing instability on other aspects of life, such as food security, employment, and health. Russell's comments serve as a call to action for all levels of government and community partners to address these pressing issues. The report urges stakeholders to take proactive steps to increase the supply of affordable housing and to implement policies that ensure housing stability for all residents. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.